Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency. Before we take a look at the markets though, wanted to let you know that we have free indicators on our page here, Forex CFD indicators /free, and you can download all of them here as you want. The Wiz tool is very handy, the free version, that is the Camarilla free version, all of that is here. So check out this page if you're looking for more free indicators and free tools. All right, traders, so another week is over. We have a weekly candle that is very small in size. The volatility is almost not there. 112.50 is a high, 111.60-ish as a low. That's a 90 pip candle for a weekly candle. Extremely slow price action at this moment. And we have a fractal now at the bottom. So indicating yet again a very weak bearish breakout. And in this regard, a continuation of what could be a falling wedge pattern that we already indicated in the past, and it doesn't seem the price is breaking this falling wedge for the moment. Now, does that mean the price is going to fly up? Not necessarily. There is just very little price movement, but price is attempting to break the 21 EMA. If it does close above this, what is it, 112.40, 112.50 zone, I think there's a fair chance price could make it up to 113.25, 113.50, and retest the top of this rising wedge right here. All right, that's a resistance zone with the long-term moving average, which has already acted as resistance once, twice, 3 times. All right, and we have also that rising wedge trend line to consider. All right, so that's another factor. So that's a confluence of resistance, and we'll have to see how price responds there. If there's a bear flag, good chance for breakout. If there's a stronger reaction, then price could still be in a downtrend. All right, this could be a very big ABC, and price could still be in this downtrend. Okay, so for downside, we're looking for a break below this trend line right here, this support trend line. Also break below the 21 EMA. That's around 111.90, 111.80ish, maybe even the low here, 111.75. All right, these bottoms too, got to be careful. Those are support levels, potential head and shoulders levels. So we need a break, preferably a good candle close below that would signal that bearish breakout on this daily chart. So those are the main range levels. A break, by the way, of 111.75, I think for the moment, probably a good target is 111. All right, because we don't want to be too ambitious in our targets. I think something like this could still provide a support, and of course, generally speaking, the price movement is not that much. If it breaks 111, of course, then the next target could be 110. Looking at this, we see another ABC here, a lot of ABCs, a lot of smaller corrections. What could happen? I was analyzing it this morning that this is maybe an A, B, C, D, E triangle. So for the E triangle, for a contracting triangle, we need price to break below this 21 EMA. So what could happen is that even if price breaks below 111.80, we might see still price bouncing at something like this fib. Let's put a fib from here to here. There we go. 111.50-ish could still be a bouncing spot from this perspective if the triangle indeed pattern plays out. So got to be careful of that. The triangle is invalidated, of course, if price breaks above this top. Then in that case, we're not looking at a wave ABCD anymore. That's 112.60. But if it bounces here, and I think there is reason for a bounce, look at the moving averages and the candlesticks there, then it's going to be very interesting how it responds to the 21 EMA around 112.05, 112. All right. If it bounces there, it could look bullish, because in that case, price is using the 21 EMA as a bouncing spot. And in that case, if we get a fractal on the 4-hour chart in this zone as price retraces but then bounces, I would say there's a fair chance of a breakout up to that 113.25. If it doesn't, and if it falls like this, right, on a 4-hour chart, but we get an intraday bounce here, okay, and then the daily candle could end up like a doji, for instance. In that case, we got to think about the fact that this could be an A, B, C, D, and up it goes for an E. And that could be the bouncing spot for a bigger move down. All right. Or, of course, you never know. It could also be a triangle the other way around. A, B, C, D, E, and then it breaks to the upside. All right. So got to keep both triangle perspectives in mind. So if it breaks below 111.80, it could be bearish, but we need a daily candle close to confirm that. Intraday is very vulnerable to a potential bounce back up and just a continuation of this triangle. All right, so maybe a bit complicated story, but there are a lot of the whole correction is very choppy. So, a lot of things to digest, a lot of risks as well in this type of environment. So yes, daily candles would confirm the breakout. Intraday perspective, very good chance that prices are going to go sideways for the moment. Pound dollar is looking a little bit different. Pound dollar is making some kind of bear flag at this moment, and that is looking bearish. All right, so if we get price to break below this 130, 129.75 zone, then 129.90 probably is more important. Then we have a fair chance that prices are going to go for continuation lower. All right, so that's the support levels we're looking for, and we're looking for this bear flag break, and the target could be 129.75. As discussed in the last video, we have multiple things there at that point, including a daily trend line. Let's take a look. There we go. Let's add this. I think it was. Anyhow, there's a bottom here, so that always provides potential support when price retests that level. The moving averages are flat, so when price breaks away from it, there's a good chance that price will revert back to it. So those are all reasons why the breakout on this 4-hour chart or 1-hour chart will not go necessarily too far, and there could be a good chance that it could bounce at some kind of level of support. All right, maybe a small supply and demand zone as well, another small reason as well. So for the moment, yes, downtrend, but the scope, the target, I don't think should be too ambitious in this environment. Let's take a look at the weekly candle. Bearish candle, and closed below the half of the bullish candle. So I think it kind of eroded the bullish sentiment of the week before. It would have stayed above that 50 fib, but it broke and closed below that 50 fib. So yes, more of a question mark at this moment, and it could easily continue at the beginning of the week with some intra-week downside pressure to retest the previous low. It doesn't have to necessarily break the previous low though, all right? Which is why aiming for around 129.30 makes sense, because 129.30 is still well above that low of 2 weeks ago at 129. Okay, so daily charts, I don't see anything interesting for the moment. The only thing that really what we're waiting for is a clear break, correction and continuation, or bounce, correction and continuation. We want some kind of clear information. Daily chart does not have that. The only thing that is very clear to me at this moment is the downtrend on the 4-hour chart, and that the fact that there could be a breakout continuation. This could be wave 1, 2. This could be all part of a wave 3 with a wave 1, 2. That would not work out actually. Sorry, 1 second. Let me do that again. This could be a wave 1, 2. This could be 3, and this could be wave 4 actually. All right, so if we put a fib from here to here on that wave 3, you can see that price respected that 38.2 to 50 fib zone. All right, so yes, wave 5 maybe of a it could be that this is maybe a extended wave 5 of a bigger wave 3. We'll have to see. Depends on how fast price moves and how does it respond to the support zone. Of course, if there's a bear flag, then we could expect more downside. This could be another wave 4, and down it goes for another wave 5. All right. For the moment, this seems good unless price breaks above the 50 fib. That would change perspectives, of course, dramatically. In that case, price is breaking above this resistance trend line. It's not likely to be a wave 4 or a bear flag anymore, and we might see some upside pressure. Look for a bull flag and continuation after that breakout. All right, traders, once again, free indicators you can find at elitecurrency.com, of course. And we'll see you in the next video soon, and wish you good trading and a good weekend. Cheers.